your question is about money, you've come to the right place. This is Investor's Guide and I'm Faye D'Souza. Well, before we go any further, let me tell you what we have lined up for you on the show this week. So we spent the last few months talking about how you should plan your investment portfolio. And one thing we keep saying over and over again is that you must have health insurance even before you make your first investment. So if you're wondering why we care so much about health insurance on an investment show, think about this. Now, you've painfully saved your money out of your salary and then you begin to invest it. Now, assume either you or one of your dependents has a health emergency and requires hospitalization. You'll wind up breaking your investments and dipping into your savings to pay the bills. And we don't want that happening. So what you need to do is buy health insurance. And that's not the only reason. In fact, Avan joins us now to tell us why each of us needs to go out today and buy a health insurance policy. Avan.
Rushing a family member to the hospital is one of our worst nightmares. But rushing a family member to the hospital without health insurance is a reality none of us should face. Apart from sucking the very life out of you, this predicament will suck out all the money from you as well. Now, before you sit back and tell yourself that the health insurance policy you have from your workplace has you covered, listen up. This isn't enough. The group health policies that most of us receive from our employers is a good start, but can't be your only bet. If you think about the healthcare costs in most hospitals, you will realize that the average cover of 1 lakh for you and 2 family members is not really enough. Besides which, if you decide to switch jobs, you won't be covered for the gap in between your 2 jobs, and your new employer may not cover you with a new policy. The most important thing to think about is the fact that these policies are normally based on your age. If you buy a policy when you are younger, it will be cheaper. So don't wait until you've retired before you buy yourself a health cover, because it might be very expensive and very tedious. Now that we've established that you need to go out and buy a health insurance policy, how should you choose from the plethora of companies and the wide range of policies on offer? And how much money should you spend on your health insurance? Investor's Guide has all the answers.
So like Avan said, the cover you get from your employer is not enough and you need to be better insured. But how much insurance should you buy and what is an adequate health insurance cover for each of us? Well, we fished out our signature calculators once again and found out. Long hours in the office, hurriedly eaten fast food meals, and stressful lives. We know the drill. You spend all that time working, saving and investing, but during a crisis you won't have the time to worry about how you'll pay and how much. A simple cashless health insurance policy will ensure you never need to pay for hospitalization again. The insurance company will clear your bill directly with the hospital. Now, you might think the insurance policy your employer has given you is enough, but look at the math. If you are a 30-year-old living in one of India's big cities, you need health insurance of at least 5 lakh rupees for each of your family members.
In a state-of-the-art hospital, for a stay for 3 to 4 days in a single room, it cost somewhere around 40 to 60,000 rupees, provided the patient is undergoing some treatment which can last only for 3-4 days, which will take 3-4 days time. But if they undergo some major surgery or extensive treatment like heart surgery or transplantation, that can even go up to 2 to 3 lakhs.
So you run up a bill of 2 or 3 lakh rupees. And if your employer gives you a cover of 1 lakh rupees, you're still falling short. You need to buy an additional policy of your own because you can't rely on just the policy that your company has given you.
Currently, if you're covered by a policy which is by the company with the insurance company, at some stage it is possible that the company might just revoke it. The company might say, we are no longer covering you for medical. Or if you're between jobs, You've left one job, you've taken up the other job, and if you have a 15-day gap, in that period you have no life cover, you have no medical cover.
After your retirement or after you're not working with a particular company, and that is typically at a later stage in life, that time when you need a health insurance, it is very, very expensive, or it might be very, very difficult to get health policy, because by that time you develop certain pre-existing conditions like a blood pressure or sugar or something like that.
So buy a policy of your own to complement the one your employer has given you. So if you run up a bill of more than 1 lakh rupees, you can combine the two policies and make that claim.
If the employer is providing that coverage, I think the first priority should be to utilize the cover available within the corporate setup. And then if that is only getting breached somewhere and you require additional support, should you dip into your own policy.
But then how do you choose from the flood of options available in the market? There are two policies available to you. You could buy a basic cashless policy that will pay for hospital bills every time you're hospitalized for more than 24 hours. Or you could buy a critical illness cover that will pay you a pre-decided amount if you're diagnosed with an illness like cancer, stroke or organ failure.
Now Mediclaim only reimburses you to the extent of your hospital expenses. And critical is not bothered as to what are your hospital expenses. You have to just submit a doctor's certificate that you are diagnosed with the critical illness, and whether it is a rider, whether it is a standalone, it will always pay out the lump sum to you.
Two major drawbacks. One, the number of diseases that it covers may be very little, and you may not really be open to such diseases. So it will cover a heart attack, it might cover a kidney failure and things like that. And secondly, people's ability to understand a critical illness policy before they buy is it's not an easy product to understand.
We recommend that you first buy the cashless policy that will add up to 5 lakh rupees when combined with your employer's insurance policy. The critical illness cover could be an optional add-on. So if you were to buy a family plan to cover yourself, your spouse and a child for 4 lakh rupees each, that would cost you about 10,000 rupees a year. And here's another reason to buy health insurance. The premium you pay is tax deductible. So even if you've exhausted your 1 lakh rupees Section 80C benefit, you can still claim a deduction of up to 35,000 rupees. And that's not all.
If you are taking a policy for your parents, you will get deduction worth another 15,000. So net in net, your family and your parents together put, you can go up to 30,000 today under ATD. Same ways, if your parents happen to be senior citizens, then instead of 15, they get additional benefit up to 20,000. So it could be 15 plus 20, which could make it 35,000.
So in effect, if you're in the highest taxation bracket and you're buying a policy for 4 lakh rupees, your final cost comes down by 3,000 rupees to a net of only 7,000 rupees a year. So before you call your agent, here are some tips to get you started. Check the internet for the best pricing on your policy. Now most policies exclude certain illnesses, so make sure you're aware of all the exclusions. Check your policy for the fine print. It might limit your expenditure on doctor's fees and hospital room rents. And find a policy with the longest cover that will cover you at least until the age of 70. Well, remember, you have to buy health insurance today, and remember to always pay your premiums on time, because if you don't pay it on time, the policy lapses and you have to start a fresh policy all over again. We slip into a quick break now, but on the other side, Dhirendra Kumar, our mutual fund expert, had designed a portfolio. It's given us a return of 7.5%. We check back with him to see if it's time to make some changes.